Hey guys, welcome back to the Greenback Voyage podcast. I'm your host Shravan, and with me is Joel.
Hey guys, welcome back to our finance edition.
Yeah, it's good to be back for another week of hectic news. I say let's get it started off right away. We can talk about oil news first. So last week, the three main oil companies, Exxon, Chevron, and Shell, all had huge revolutions. If you haven't heard, Exxon shareholders voted to appoint at least 2 climate-conscious members to the company's board, with a third one still too close to call at, the time of recording this podcast. The counterparts at Chevron supported a motion to include emissions from burning fuels sold by the company in future reduction targets, which is also against the wishes of their own board. And in Europe, Shell was ordered to cut their greenhouse gas emissions by 45% by 2030, which is frankly a much stiffer target than I think what most oil companies proposed early on last year. I don't know. What do you think about these?
So it's a couple of
changes?
it's a couple of activist investors or activist board members on each of these companies that are making these moves, right? Or forcing the companies to do this, right?
Mm-hmm.
And I mean, it's all for the better. It's not like this is a bad thing, right?
Yeah.
But yeah, it's good to see. First of all, are they going to achieve their targets in time? I don't know. It's possible, but they'll probably push the deadlines. But it looks like it's a good sign that these companies are moving towards essentially saving the planet, right? And they have the cash, they have the balance sheet, they have the cash to do this. They can afford it, and they can afford to move in that direction, and they can afford to adopt green projects and things like that. So it's a good step in the right direction.
Yeah, I mean, I think it's going to be tough, like you said, for them to fully achieve this. But
yeah, it's really it's not realistic targets, to be honest.
Yeah, but to be fair, the fact that we're seeing activists really push for these initiatives, and they did it within a month. So it's hopeful that this capitalistic kind of system may work in our favor for once. At least hopefully it will. I know Shell specifically, they're obviously going to appeal the decision and say that some BS on how their carbon dioxide that's emitted is important for the economy or something like that.
But it would be tough, especially with a company like Shell as well. It would be pretty tough because there's a lot of underlying interest behind these companies, right? If you take a look at Shell, one of their top stakeholders is Qatar, right? The country. So you can make these motions and everything, but are you really going to achieve this to 100%? It will be a miracle if they actually do this. That's what I'm saying. But it's a good step in the right direction. So we'll have to see how it pans out.
This goal of net zero that's been going around, do you think that is achievable by not even 2030? I think that's way too early, but maybe I think most of these companies are hoping by 2040 to 2050, right? Do you think that is achievable to reach total net zero?
I mean, net zero, it's non-existent in oil or natural gas production, right?
I don't think it'll be non-existent. I just think there'll be other products that they produce that will sort of cut down on it. Like, for example, you look at...
Well, what I believe is, we're obviously going to run out of gas, or we're obviously going to run out of natural gas, we're going to run out of oil in probably a century. With the rapid growth of the world, it's probably going to happen within a century or probably maybe at most I would say like a century or two. All right, even like Saudi Arabia is projected to run out of oil by 70 or 80 years. So, and they're trying to transition their country, the business models, to a tourist and over international banking or international investment type. So
Yeah.
once we transition from our dependency on oil and natural gas, that's you can't. I don't think you will ever achieve net zero. We'll just transition away from this and go towards net zero solutions. But the oil and gas industry will never be a net zero industry. It's just impossible, right? We just have to transition out of it.
Yeah, and what I really hate about some of these oil companies is not the fact that, they're so driven to prop up revenue for the company. It's more so how can they make more money for themselves. I mean, if you recall, Exxon was at the time in 2010 the most valuable company on the planet. And essentially what happened is that instead of focusing on new products, new ideas, they just stayed in the same stagnant route and hoped to achieve something out of it while making, a good big bang buck for them. And I mean, if you've seen the results of it, they probably held a 20% or 15% holding in the S&P 500 in 2010, and now that's dwindled down all the way to about 4%. So, yeah, I mean, in the end, it won't work out for them. I mean, sure, you can argue the fact that customers will still need lots of oil even as the world moves away from fossil fuels, but I don't think Exxon can profit much from that type of demand anymore.
Yeah, it'll just have to be up to corporations and companies here, right? Innovative companies like Tesla, right? They bring the cost down of their cars. Other companies out there, GM, Ford, they bring the cost down. And if you can...
And they're creating their own energy infrastructure that's not dependent on oil.
Right, so you bring down the cost below what, a gallon of gas is, and you get the same utility out of electric charge for your car, then at that point, gas becomes obsolete, right? Because gas and oil is destroying the world, but EV and an electric technology isn't. So there is an argument to be made where Tesla does have some carbon footprint when they develop batteries or manufacture their cars, but over the time they will bring that down, and we will transition away. So yeah,
and I think we can move on to the other oil news that's come out recently, and that's OPEC. I mean, we've seen the gas prices rise dramatically over the past, 4 or 5 months now, which is sort of what we predicted at the start of January. But yeah, OPEC came out of their recent meeting. They agreed to stick to the plan that they originally made in April, keeping to about 2.1 million barrels per day of supply to the market between May and July. So right now they're trying to gradually ease production cuts, and I'm guessing they're trying to go back to normal, which was about 5.8 to 6 million barrels per day in about 2019. But I don't think that's the interesting thing here. I think the more interesting thing that we have to talk about is the effect of OPEC's policies it could have on Iranian and Russian oil supply, and how that might shift prices one way or the other. I don't know how much you know about it, but do you have any thoughts?
I'm not sure. When we talk about Iran, right, we have sanctioned them. We can't really buy their oil. They actually do backdoor dealings with China for their oil, but in terms of the market, I don't think any other country can buy oil directly from Iran.
But China's still a big player.
Yeah, well, that's because China is our number one enemy, and that's why Iran's dealing with them. If India was our number one enemy, they will be dealing with them. But China is just too powerful. That's why they're doing these backdoor dealings where China directly purchases oil from Iran, even though we have sanctions against them, and we really can't do anything about that because China is just it's really tough to back China out of this. I'm not sure about the Russia oil. I know that they're one of the largest natural gas producers. But in terms of Russian oil, Bill, I mean, we don't have any sanctions on them. There's no EU sanctions on Russia. I don't know how this would affect Russia, the OPEC decision.
Yeah, I mean, I don't know. I kind of think that Iran's might start to derail the market balance of
Iran's
oil.
what?
Iranian barrels, they might start derailing the market balance of oil.
Yeah, I mean, look, Iran's in this situation where the U.S. and a few other countries don't want us to lift off the sanctions, right? We have a lot of sanctions on Iran, but there are certain countries like Russia and a few EU countries who want to take the sanctions out, and that's purely economic interest, right? Once we take the sanctions out, they'll start exporting oil. They'll start exporting a bunch of other stuff, and these EU countries and Russia, they can start dealing with arms, right? Russia will start selling them weapons. France might do that, so that's why they want the sanctions out. It's purely economic interest. And the US, Saudi Arabia, Israel, these guys don't want this. They don't want to take the sanctions off just because they don't want Iran to grow any more rapidly than their current growth, right? So it comes down to what Biden's going to do on the Iran deal that Obama had. Is he going to enter it or not? We'll have to see what he does in his term. But I don't want to get off a tangent here, but Iran is doing some major moves in terms of their nuclear program. The IAEA has released a report saying that they don't have they never got the data of Iranian enrichment, uranium enrichment, and they're starting to be a bit more aggressive and hostile. So we'll have to see how Biden deals with this.
Yeah, I mean, I don't think it will be any time in the future, if I'm being honest. I truly think that right now for Biden, the Middle East is not a top priority. I mean, we saw it with, the Israel-Palestine conflict that we had recently. Like, he wasn't too involved in coming out with anything or saying anything against either Israel or Palestine. So, I don't think the Middle East is on his docket right now.
Yeah, I mean, Biden is, back in the day when he was a senator, he was like pro-Israel. So he probably still has those beliefs in him, right? That's why he wasn't calling for a ceasefire immediately like some other world leaders. And that's why he said, it's Israel's right to defend themselves and things like that. But I think he should have Middle East as one of his top focuses in foreign policy with China. Middle East will always be, a strong.
Oh no, it will always be a major topic. I'm kind of surprised that he hasn't said anything about it. He's really focused on more domestic issues than foreign.
Yeah, that's pretty true. There's some truth to that. Yeah.
Yeah, and I guess moving on from that, we can talk about his budget plan.
Oh God.
That he detailed over the weekend.
$6 trillion.
$6 trillion. Yeah. And that's not even the worst part. It would raise federal spending to $8.2 trillion by 2031. Annual deficits ranging from $1.3 to $1.8 trillion in the next couple years alone.
Yeah, what is Janet Yellen doing? What goes through in their minds? I mean, this is insane to listen or hear about. But do these people really know what they're doing, right? They're obviously more. They know more about the economy than us. They're more credible. They're more educated. And when they do this, right? We think, wow, they're going over 5 trillion, 6 trillion, 8 trillion. It's going to be 10 trillion in a few years, and maybe in this decade even. So I don't know what to think of this. Do we trust in our officials, or what happens?
Because the thing is, right, yeah, both Yellen and Powell have stated repeatedly that if inflation does happen, there are measures for them to subsidize it. But the thing is, like, $6 trillion, this is humongous. I mean, and this isn't even the full scope, because they're planning to, have other policy promises like the student loan forgiveness, lowering the Medicare age, creating public healthcare options,
And like the
reducing
American
prescription drug
Families Act,
prices. Yeah, I mean, they're trying to solve all the issues at once,
right?
which is insane.
Yeah, it's like decades of problems that presidents and parties have been trying to solve, and it's all trying to be done in 4 years, maybe 2 years. That's probably what they're projecting. But in one presidential term, they're trying to solve decades of problems. I mean, it's I don't know what to think of it. I mean, it's good effort. I mean, I'm all for it. Increasing minimum wage. Doing some partial student loan forgiveness. I'm not in favor of complete, but these types of policies will definitely help the nation. But there is a certain limit to everything, right? You can't do everything at once, and you can't have this huge of a. I mean, even like the stimulus packages, right? Only like 30 or 25% was direct checks in all of the stimulus packages. The rest 75 went to state governments and other things. Right, it wasn't a direct payment plan. So who knows what else is in these packages, right? There's going to be some senator out there with some super PAC behind him, pressuring him to allocate a few $billions here, and that's going to be for every representative in there. So how efficient is this package going to be? I mean,
I think that's the key thing we have to focus on, because you can throw your money at everything, but money doesn't solve all problems. Solves most of it, but over the past 20 years, the government itself has been seen as an inefficient market for money to go through. We haven't been using the tax dollars that we pay to the government as efficiently as we could be. And right now, for us to just put $6 trillion out there and knowing the Democrats, if they want to stay in power, they'd want these, plans of infrastructure, creating roads, bridges, or, spending for children and families and creating universal preschool. They want all these policies adopted before midterms, or even before Biden's next election coming up in 2024. Will it happen by then? I don't know.
Yeah, there definitely is a political move behind this, right? Like you said, midterms. Yeah. That's usually when there's like a party switch in the Senate or the House in the midterms. That's when the Democrats, the Republicans. That the midterm is when it's really more likely to have a switch. So for them to push this type of policy or these types of policies, it probably is a political move, right?
Mm-hmm. Yeah, and I guess one last point we have to make is, if he's planning to, propose $6 trillion now and $8.2 trillion by 2031, what more does he need to spend in to make it seem like $8.2 trillion budget is necessary? Because if this was a one-time thing, I'd be for it. But the fact that he wants to continue to increase it year over year without much of a plan in place on why the costs are going up like that, it's tough for me to really be in support of this plan.
I mean, I think the policies are in good faith. It's just, it's really hard to swallow $8 trillion budgets. I mean, that's just the spending, the amount of government spending is and money printing, right? I mean, let's be honest. Mm-hmm. This is all digital money, or it is being printed, right? So who is going to pay the cost, the final cost. Who's going to pay it? Is the future generation, are they going to have pensions, right? Are they going to have social security, right? How are you going to, who's going to pay for all this, right? It's going to be the future generations.
Yeah, that's the thing, because you can't just, his only goal right now that I'm seeing is raising corporate tax, not even to where Obama had it in the 30% mark, but to 28% from 21. That's not much of an increase. And just saying that, marginalized tax will be at 40% for anyone making over $425,000 per year I don't think those two combined can really justify the means for spending $6 trillion. Like, you're gonna have to find money from somewhere, some other place. Either what they're doing right now is really looking at long term, like, okay, if we invest heavily now into capital expenditure to sustain our population, educate them, and grow them, then in the future, we will be stronger than ever. But I don't think money is going to solve all of those problems. We need a fundamental shift in the way we educate people, in the way we treat people, before we just throw money at them and say, here's all the money you need to fix your problems.
Right. Yeah. Definitely truth to that statement. Yeah. It's all about efficiency in this budget.
Yeah.
How they're going to allocate everything.
I would just appreciate a balanced budget for once at some point, because debt to GDP is growing by the year, and you can't have too many good things at once. We've tried that before, and we've had 3 crashes in the past 20 years.
I mean, that's probably the fate that they're riding on, right? The idea that the Federal Reserve they've said it themselves, right? They're prepared for anything. So that type of, support that you have when you fall, you have some cushion be below you. That's probably why they're, pumping out these policies, like $1 trillion policies just like that, because the Fed is like an insurance for you. If something goes wrong, the Fed's going to help you. It's going to save the day, right? So that's probably the mindset behind it.
Yeah, but I don't think the Fed can stop everything.
Yeah.
If everything falls at once.
Well,
it could be like
they'll have a big stress 80s. Test one day.
Yeah. I mean, one thing's for sure. I don't think we're going to be in a stagnation. Yeah, I mean, we'll see. Hopefully the jobs report that comes out later this Friday kind of shows that whatever the Fed is doing right now is, on the right path towards full unemployment.
Well,
otherwise it'll be hard justifying whatever they're doing right now.
Right. Well, speaking of jobs, this report came out recently that the 5 states in the Southwest, Arizona, New Mexico, Texas, Oklahoma, and I believe, did I mention New Mexico? I think I did.
I think so.
I think Nevada's the 5th one. Yeah. They've had a 30% increase in job growth over the past 4 years, which is the highest ever. With more than 100,000 manufacturing jobs added from January 2017 to January 2020. That is pretty incredible. And I mean, Texas and New Mexico are becoming, these powerhouses, in the country. There's I think Samsung is going there. They're building this huge plant in New Mexico or Nevada. I'm not sure which state it is. Texas, obviously, everyone has read about the hype there. Tesla's there. Slowly, Silicon Valley's having a little diaspora to there. So it looks like the Southwest is kind of becoming this new hot, area of growth.
Yeah, I mean, I remember when I first went down to Texas in, what was it? What would it have been? 2011, 2012? I mean, you'd see houses as big as the ones we have here in the East Coast go for around $320K. And the thing over there is the landscape is really flat. It provides good support for lots of infrastructure. And I mean, if I had the money back then, I would have definitely invested into Texas's economy, whether it was through real estate or other means. Unfortunately, that'll be probably dead by the time I can get that amount of money. But yeah, it's insane what the Southwest in general has done. And it's kind of shifted the power away from, the coast cities, San Francisco, Los Angeles, New York City, DC, and Florida. And it's pushed them all towards 2, 3, 4 states in the Southwest.
Yeah. And it could be the new next EV hub, essentially. I mean, I think Lucid Motors is considered one of, the top competitors to Tesla. They're planning to build nearly 700 million vehicle factory in Arizona this year.
Wow.
Yeah. So it could definitely be, that area could definitely be a spot of, it is a spot of rapid growth, but it could definitely become a California-esque place, so yeah, it's interesting stuff.
Yeah, I think as time goes on, people will start to move away from the coast cities and start to move inward, just because it's hard to really develop a city after it's built. Like you look at the old cities, Philadelphia, Boston, New York City. Well, we can take those 3 for example. You can't really have new technology or architecture designs there that can really put the spotlight on them.
Yeah, it's really tough. Yeah,
it's tough to do that. Yeah,
we heard Egypt is transitioning their capital from somewhere else, right?
Mm-hmm.
Yeah, right.
Yeah, so it's tough to really push that forward unless you relocate somewhere else. And especially at some point the population will stagnate because there's only a maximum the population can take. So I wouldn't be surprised in the future if you see cities like Denver or Salt Lake City, or even, cities in Kansas City, cities in Missouri, for example, especially along the Mississippi River, start to pick up traction.
Definitely, I think Denver's, there's a lot of chat.
Denver and Salt Lake City,
yeah.
I think those are really 2 good places that people haven't taken a look at. I don't think it'll be as big as Texas, just based off the fact that they're a bit too hilly for that and mountainous, but I think if you look towards the Mississippi River, there could be some cities around there that could start populating, especially with the infrastructure package.
Hey, I'm rooting for Denver because Palantir's headquarters is there.
Oh, really?
Yeah.
Oh, I thought they'd be based in New York.
No, they're in Denver, Colorado.
Oh, well, dang. Okay, maybe we should go to Denver then.
Yeah, I'm gonna demand that they pay dividends, even though they're not profitable.
Just stand outside with pickets, just be like, pay us $2 per share. But yeah, I think one last thing we can talk about is the meme stocks of the week. You want to start with the AMC or NEO? Which one?
Hey, to be fair, NEO is not a meme stock. Let's be honest.
I mean, it sort of is. It's with the hype train. Okay. Anything involved with the hype.
I would say GameStop
or the hype of memes.
AMC, a few other.
BlackBerry.
Yeah, BlackBerry. Those 3 are probably considered. Those are the meme stocks, right?
Yeah. Okay. Those are the memes.
NEO's,
okay. Let me rephrase. Then the hype stock.
The hype.
So we can.
I would say growth, leaning on hype. All right.
Nah, I would say more hype than growth. Growth is sort of like Etsy or something else.
Okay, well that's fair. They just do the 300% revenue growth, but yeah, sure.
Yeah, but they're still a growth company. They're fairly new. They're still growing. NEO is sort of like a speculative play, in my opinion, still. Like you have to show some growth in order for it to be a growth play.
Yeah, that's completely fair argument. I mean, it's what, few years when it was founded, so yeah, it definitely is a speculative play. They haven't proven anything yet so far in Major League. But yeah,
like Palantir for me is still like a speculative play. It's one I'm invested in, but it's still a speculative play because we've only known them for like half a year. We don't know how their management system is and all that sort of stuff. So, yeah, that's all that I categorize under like the hype stocks, I guess you'd say.
Yeah, well, going back to Neo, the surprising thing is, right, so Tuesday morning, right, today, they basically said they missed out on their delivery target. So they were down by a few thousand, or about 1,500. I'm not sure what the exact number is. But what they said was they blamed it on the global semiconductor shortage for the decline. And the major news, right, if they just left it off with that, the stock would be down like 5%, most likely. But the major news was that they said that their second quarter forecast for deliveries is going to be 21,000 cars. And that implies about 8,200 cars in the month of June. So this June. So that is an insane amount of...
Even with the shortage.
I mean, yeah, the shortage is kind of easing now, but yeah, even with the current situation, that'll be their monthly record. But a 22,000 vehicle delivery is quite, that would maybe cement themselves as a formidable company in China, and probably
yeah, no doubt.
Yeah, so
yeah,
that's why the stock was up based on the management forecast. It was up 10%. It did my portfolio very, very, very well today. But yeah, I was pretty happy about that. And also, I think like Citigroup also had like a target raise, and they also, I think they...
Yeah, but to be fair to Citigroup, they've been shorting Tesla for the past year, and every time they do, it's game over.
These analysts are all, they have the right due diligence to short Tesla, but the retail investors just won't let them do it. That's the funny thing. They're all right in the reasons to short Tesla. It's just that retail investors are the insanity that what 2020 was. That's what happened.
Yeah.
So, but well, I am all the best to Michael Blurry with his short position. I think it's...
I mean, to be fair on him, he's done pretty well.
Yeah, it's down 20% since he like reported it, right?
Yeah.
So, yeah.
I mean, that's when he reported it. He would have done it way before then, right?
Yeah, that's right. So that's when the SEC filing was. But he could have bought it.
Mans is on fire.
Yeah. Tesla stock could be down 50% from where he bought it, and he might close it then. So.
Yeah.
But I think like him and like JP Morgan are probably the most bearish outlooks I've seen. JP Morgan still has like their price target around 150 or something. So that's still like an 80% drop from where Tesla is right now. So
my God,
we'll see if JP Morgan and Michael Blurry are right about Tesla.
Yeah.
They to be fair, they're right. I mean, Tesla is trading at what, 1,000 P ratio, so let's see.
It's insane.
Yeah, so we'll have to see if retail investors have paper hands. So.
Yeah. What I'm really kind of scared about is because Tesla was added to the S&P index.
Yeah.
At possibly the worst time ever, which we were all saying. Like, it could derail like the market for days, even weeks.
I remember the good old days when Tesla would announce a stock split and the stock would be up like 20% after hours.
Oh my God.
The insanity that 2020 was with Tesla. It was good times.
Yeah. And now it's all about Elon Musk.
Look, dude, everyone hates Elon Musk right now just because of what he did with Dogecoin. And I think it was... Yeah.
I mean, are we shocked? Are we shocked, really, that he's done it? No, I'm not.
Yeah, it's like every time I go on Twitter...
He said to short Tesla.
What?
remember last year he said, "Oh, Tesla is too high at this price."
Yeah.
In my opinion, it drops like 5% within the next 20 minutes.
Mm-hmm.
Like it's insane.
That's right. And
I don't know if you like saw the report today, but the SEC is finally cracking down on some of these tweets
I read,
and saying that
it was like Tesla's management didn't overlook his tweets, right? That was their agreement.
Yeah.
I
mean, they have one job, fam, at this point.
Yeah, you know, I can just
it.
imagine Elon Musk in the conference room being like, "You can't control me. This freedom of speech," saying all that shit. So, but you know, people kind of like hate Elon Musk for what he did with Bitcoin, where you know he put out that tweet, right, that Tesla was going to accept Bitcoin, and also with Dogecoin.
I mean, we'll see whether Tesla still has Bitcoin on their balance sheet when Q2 arrives.
They should have it, right?
Imagine the scenes.
Or they can't sell it.
I mean, he could have sold it. Like, no one really knows. It's all speculation at this point. But imagine the scenes that would happen if it comes out that he actually sold it.
Yeah.
Before he made the announcement.
I mean, if it really happened, Bitcoin will definitely make new lows if he actually sold out entirely out of his position. And like, I think like ARK also has Bitcoin too, right? I don't know if they will
continue. Oh, they're heavy on Bitcoin.
Dude, ARK is like, they have some exposure problems low key, like with Tesla, Bitcoin. I mean, even like
I mean, that was the risk. That was the risk they'd always take, wouldn't they?
Yeah, but
they're so focused on growth. I mean,
hey,
like
at
some point it's got to cool down.
Kathy's like saying that they've set themselves up for like 5 to 10 years of growth. But we'll just have to see if she's right again about her vision.
Yeah, I mean, who knows? This might be like another blip on the radar. This downturn that they've had.
Yeah, it could be. But you know, to me, I don't really see that happening, because from 2010 to 2020, we had an insane rally, insane bull run, right, or insane bull market, and for that to continue, it could happen. I mean, we'll just have to see how investors view inflation fears and all this, you know, spending. But it's really optimistic to think that we're already in a very like really high like valuation market. So for that to even go
heavily,
even go further than that, it's going to be quite the sight to see. We'll have another bubble in our hands.
Oh yeah, I don't doubt that. I mean, man, if it happens, another crash within the next year or so, I'm gonna put all the blame on the Fed. Like, there's really no other person to be at fault for this other than the Fed, for putting this false sense of hope in us.
Yeah, it will take some blame.
Yeah. They shouldn't take some blame. They should take all the blame.
Yeah, just blame Powell.
Because, yeah, I mean, as soon as they announced it back in late March last year that they'll do whatever they can to bump up stocks again, it's just been on a tear since then.
Yeah.
So, yeah, it won't stop.
Hey, you know, whatever goes up comes down. So we'll just have to wait.
And see. Yeah. I mean,
get the popcorn ready and watch what happens.
Your favorite technical sort of theory, the Elliott wave curve, could happen to the overall stock market. If you take a look at it, I mean, wave 1 would be the rise in tech in the late 90s, early 2000s. And then wave 2 would be the crash. Wave 3 would be... Or wave 2 wouldn't be the crash, sorry. Wave 2 would be like that stagnation period between 2000 and 2009. And then wave 3 would be just this insane bull run rally from 2010 onwards. And wave 4 could technically be this, or we could still be on wave 3, who knows. But it remains to be seen.
Yeah, we'll just have to see what happens.
Everything's better in hindsight. But yeah, I think that's all we have to talk about today. Interesting convo that we had. But if you're listening on YouTube or Spotify, make sure to follow or subscribe us. Leave a like, Comment down below what you think about this latest episode and possibly where you see the market going in the next couple of months or years. And we will see you all next time.